Right. Hi, everyone. Great to be back. Thanks so much for having me again. It's been incredible working with so many of you over the past year, helping charities get more out of e-commerce and ultimately delivering more back to your causes. When I was stood here last year, we were working with around a dozen charities. Today, that number's grown to over 50. So thank you for all your amazing support. So today I want to dig into a big important question, which is how can we overcome the financial challenges in charity retail by unlocking the full value of your stock? Before I kick off, just a quick intro to me. I'm Ollie. I'm one half of the co-founding team of Listing Monster. So we're an AI e-commerce platform, and we've got tools to help you with basically every step of your item journey, from that initial donation valuation and sorting through to listing online, pricing, management of those listings, and inventory management. And we work with over 50 charities now, as well as going on 100 commercial resellers, and we're on course to list over 2 million items this coming year, which is a great result. Quick background to me. So I'd previously built up and sold an online resale business, which was listing on Shopify and eBay, and then did a few years of consulting back into the e-commerce sector. So I'm well versed in just how difficult it is to scale a unique goods e-commerce business profitably. Things like scaling issues, unit economics, contribution margin kept me up at night for a number of years, and it's something I'm really passionate about helping people with. So, agenda for today, I just want to touch on your guys' lived reality, which is the profit headwinds you're seeing, and then swiftly moving on to what we think is a massive hidden opportunity to overcome those headwinds by unlocking more value from your existing stock. Importantly, then, why now is the right time to take action on that? And then I'll move on to our two lever methodology for going about unlocking that value. Firstly, better identifying the value you have and then making sure it ends up in the right channel. And then once the stock's in the right channel, how you monetize that value quicker. I'll then touch on some real case studies of charities doing this right now, and then round up with how a platform like Listing Monster can help you achieve it. So I just want to set the scene first, and you don't need me to tell you a lot of the contents of this slide. It's your live reality. It's something I talk about with charity retail leaders every day. Your profit's under pressure, mainly from rising costs, but we're also starting to see some pressures on revenue growth. As Robin alluded to earlier, there's some sort of competition for stock and falling donation quality. We've got the rise of personal reselling apps like Vinted, as well as we're starting to see an increase in retailer take-back schemes for stock, getting ahead of what the implications for extended producer responsibility might be. And then the decline of rag prices have obviously been ongoing for a few years now. So the headline story is that charity retail profit margins are down, and down quite significantly for many members. But we think there's a big hidden opportunity available to everyone to overcome the headwinds they're currently incurring by unlocking more value from their existing stock flow. So, in the years we've been working with the sector, it's become increasingly obvious to us that charities aren't quite capturing the full value of their donated stock on global marketplaces. But this is not lost on everyone. There's now an entire industry, well, in the UK, thousands of them who would deem themselves professional resellers. And there's many making their entire living, or at least part of their living, from exploiting that price gap between in-store and online. Their strategy being to scour charity shops for bargains, and if they can check what the online value of that item is, and if they can make more than 3 times their money, they'll buy it and flip it. And it's hard to get an accurate number on just how big this profit arbitrage is, but we now serve going on 100 or so of these resellers ourselves who use a bunch of our tools to sell online. And directionally, I would expect this to be worth into the hundreds of millions annually. And it's our view that charities should start to get a larger slice of that profit pie. What's the size of the opportunity? So we've taken this approach. So online currently comprises around 4% of the charity retail income mix. If we look at a basket of charities who we would deem online leaders, who've put online right at the forefront of their retail strategy, they are maybe closer to 15%. Online making up the retail income mix. Some are even higher, pushing up above 20%. And if we simply did a thought experiment of what happens if the sector closed in on the 15% of the online leaders and got that selling price uplift from pushing a little bit more stock online, well, that would unlock an additional 500 million annually of income for the sector. That works out at around £50,000 a shop. So big numbers. We often get a lot of pushback and some concerns voiced by charities about shifting a bit more of their stock online. And the top one by far is, won't this really hurt our shops? So the first thing I just want to say is, if I look at the charities who have already done this, who are maybe pushing double-digit percentage of their stock and revenue online, they are still running healthy, strong shop networks. It can be done. We've seen it in action. And really, the goal isn't to remove all the great stock from shops. It's about finding the right balance to maximize the profit of the whole portfolio across your channels. And right now, in our view, the balance is maybe a little bit off, and charities could be capturing a bit more of that online upside by shifting a little bit, 10%, 10 percentage points more online, and taking a larger share of that profit pie, which a private industry is currently exploiting. Another pushback we get is around what's selling prices you can expect if you're shifting more of your stock online. So these are just benchmarks, and a lot depends on where your shops are in the country, affluent or less affluent areas. But we've seen charities with a 15% allocation to online still able to achieve £20 or roughly £20 average selling prices online. That softens a little bit down to £15 when you move north of 20%, but still really good in the grand scheme of things. Finally, we sometimes get asked, if every charity's at it, will the advantage disappear? Simple answer to that is charity sales currently account for a minute fraction of total marketplace volume. Those global marketplaces can absorb a lot more stock from the sector without impact. So perhaps most importantly is, why should you take action now on this? First point to mention is, we now have the technology to make this a solvable problem. Generative AI has given us the tools to be able to do this scalably for the first time and accurately, whereas we just did not have that tools beforehand. Secondly, the size of the revenue opportunity we think is just too big to ignore. Our proposition to a lot of charities, or your average charity, is that you could be earning 3 times more on 10% of your stock. So the cost of not putting that stock online is the equivalent of £300,000 in foregone revenue for every £1 million of revenue you're currently making. And I guess most pertinently to the current climate and today's presentation is, scaling up your online processing no longer has to be a massive, costly endeavor, mainly because of a new trend we're seeing. Perhaps the largest trend we're seeing in online right now is the AI helping to unlock in-store, in-shop listing, so shop staff and volunteers being able to crank out a good number of listings of a good quality each week in not much time. And this is now enabling you to grow online within or fairly within your existing cost base. So on to our two-lever methodology for how you should go about unlocking this hidden stock value. Firstly, better identifying the true value of an item that lands with you, and most importantly, making sure that it ends up in the right selling channel after that. So much of the value, the profit of the stock is determined by that initial allocation decision, and getting that right is so crucial. Secondly, once it's in the right channel, how can we monetize that value faster, turn that stock over quickly, and boost our contribution profit? So on to our first lever, identifying true value better. That current process, as you will all know within your own shop networks, might look a little bit like this. Stock lands in shops. Volunteers or shop managers rip open those donation bags, sift through stock, and then decide what it's worth and where it should be sold. And that's done currently with a mix of some staff judgment and maybe using some tools like Google Lens or checking live listings on eBay. The big problem with that is it's going to serve them the list price of the item and not the actual realistic selling price. And that can often mean that a incorrect decision on which channel it should be sold on can come about. So what is the new process available to us with the tools and technology we have today? We can now serve up a really simple app to someone in a shop where they can snap a single photo of a donated item, and in the background, an AI will identify what it is and then go off and research a realistic selling price for the item by looking at comparable sold data online. And then it can go a step further, and then based on the valuation or the characteristics of the item, actually then go and allocate that item to the correct channel. And you can actually define the rules by which the AI does its channel allocation at a single organization administrative level. And then the AI will consistently carry that out within shops. So just a quick example of this in practice. So I've got a screenshot here from our newly released sourcing tool, which tackles this problem. And you'll see that first step is just snapping photos of items. That's literally all the volunteer or shop manager has to do. Take a single photo. You might quickly snap photos of 20, 30, 40 items, and then the AI will return to you a table of results, giving you the realistic selling price of the item online over on the right-hand side, and then a sort of easy traffic light based system for which channel that item should be allocated into. So to give this a more kind of data driven example on how this is working. So we teamed up with a charity called PDSA, who were one of the early adopters of our sourcing tool. And they rolled it out initially in a quarter of their 100-strong shop network. And after a month of using it, they saw income across those shops increase on average by 22% after adopting the sourcing tool. And also they got a secondary benefit by seeing the number of rejections coming into e-commerce fall by 50%. So clearing up a lot of wasted cost at the same time. How did that happen in practice? So they told us that it had both increased the volume of items coming into eBay from shops in the first place, which had been an issue, made that more donation flow more regular, and also, perhaps most pertinently, more of the right product coming into e-commerce. So more gold, more jewelry, more of those high-end collectibles landing in the hands of e-commerce and getting the full global marketplace price. Final point, I just want to provide some emphasis on, technology adoption in shops is often a barrier. There's a lot of different technical expertise going around, and they found that once they got going, the usage spread like wildfire amongst the shop staff. They loved snapping away, getting the valuations. It literally the only thing they need to do is press take picture. And I guess not in this specific example, but when I look more broadly across the charities we've got using the tool, an interesting unintended effect has actually been how it's fed through to how shops price even on their own retail floor. It's a little bit more data driven, a little bit more market price based. So on to our second lever, which, okay, so we've worked out what the value of an item is. We've got it crucially into the right selling channel to maximize the revenue for that item. How are we then going to monetize that value as quickly and effectively as possible? So we often think there's a slight misnomer in running an online business in the charity environment. There's a perception that you need to focus exclusively on the highest value items to build the most profitable business. But actually, we think it's not about chasing the highest average selling price. It is about stock turn and contribution profit. And our kind of simple rule that we would focus on is calculate what we would call your online break-even price per item. And that factors in the opportunity cost of not selling it in store. It factors in the additional cost of processing it online, make it a kind of fully loaded, fully baked cost or price where anything you can get over that should be channeled into online. So you should be selling as many items as possible above that threshold. On the right hand side, I've just got a kind of illustrative example of how that works in practice. I've got two charities with two different strategies. One is just focusing on maximizing average selling price, just focusing on selling the highest value items. The other has loosened its criteria a little bit and is still selling the high value items online, but has also opened up to selling mid value items online. And you'll see that even though that second charity has a significantly lower average selling price, and after the additional costs of processing those extra items, it's turning an additional £100,000 in contribution profit. So what does our online monetization process look like today, or kind of the existing process over the last few years? Well, it's mainly a hub-based model, and there's quite slow inbound to that hub. So stock comes into shops, it waits and sits around at shops, and then is intermittently sent to the hub. A lot of time is lost at this point with stock not actually on the market. Stock then lands at the hub, and then there's a slow manual listing process, which can be upwards of 10 or 20 minutes to do everything from scratch in a manual way. And this means backlogs build at the warehouse, and that is again revenue sitting on the table if it's not live for sale. And it also means there's a very high cost attached to each listing, as there's a lot of time involved in each listing. And then after the item goes live on a marketplace, teams are so maxed out in terms of their capacity, there's not a lot of active management or repricing of listings after they're live. There's a sort of tendency to choose a price you hope to get, throw the listing up, and hope for the best. And what this means is a lot of stock sits online getting stale, not selling. It's not at the right level, not on the right marketplace, and a lot ends up unsold or blocking up warehouse space. So what is the new process for online selling we're seeing emerging? Well, there's a fundamental change in model. There's now the option to have a mix of in-store listing and hub-based listing. This has been a major innovation over the last few months and couple of years. And we're seeing an approach that's working really well, which is shops quickly listing and turning over and monetizing. That's sort of your run-of-the-mill, mid-value donated items. And then that frees up the hub to focus on value add activities. So taking really high-end things, specialist items, focusing on activities like function testing, which can actually add value to an item online if you're adding all that information in. And it can also open up new product categories like electronics recycling. Or they could just spend more time on merchandising and marketing existing listings to make sure you actually get the sale. We then segue into a much faster listing process. So the benchmark these days is a few minutes with if you've got the help of a AI lister and you're up and running nicely with that. This crucially improves the throughput of our e-commerce operation. So for a given number of people, a given amount of space, we're able to support a much higher revenue number. And at the same time, we have a much lower cost attached to each listing as there's less time involved. We kind of think the next frontier, which is what happens after the listing is up and live, is possibly the biggest area and opportunity for improvement. So previously I was mentioning there's not a lot of active management going on of charity online listings right now after they're up for sale, mainly just due to lack of capacity within the team. We've now got the capability for AI and automation to try all the tricks of the trade, merchandising wise, to get stuff sold in the background on autopilot while we sleep. So automations can help us relist, dynamically reprice, refresh listings in the eyes of search engines, switch formats from auction to buy it now and back again to access different buyer pools, get listings cross-listed onto different marketplaces. These are all really time-consuming jobs to do manually, and now we can do them on autopilot. What this means is you'll know that if an item's not selling after 60 or 90 days, you've tried everything, and you should then just price to clear, free up that warehouse space, and move on to the next item. So what are some benchmarks for what is possible in terms of the value you can create here? So I've split this up into in-store versus hub. On the in-store side of things, we're seeing an emerging benchmark of 20 listings per week per shop as eminently achievable, with only a couple of hours of time across staff and volunteers. That figure can be a lot higher. You know, we've seen once shop staff take ownership of the listing process, they see the money from the sale flow immediately back into their till. They see the increased valuations they can get for their best items online. The listing numbers can go off like a rocket and be 50 plus a week in the cases that people are highly motivated. But if we just take the 20 number for now, that would be 1,000 listings per shop per year. And if we take some sector average assumptions on your sell through and your average selling price, that would be roughly, give or take, £12,000 of revenue per shop per year online. Multiply that by your number of shops and you get the in-store listing revenue opportunity available to you. So for example, with my assumptions, if you're a 30 shop charity and you're not currently doing in-store listing, that's a £360,000 annual revenue opportunity with your existing resources, capacity and cost base. On the hub side of things, the new benchmark for listings per day per full-time employee is now 40, up from 20 beforehand. Off the bat, that's halved our cost per listing and improved our profitability. And then on top of that, we're starting to see an increase in sell-through rates trickle through as AI can help do that extra leg of optimization for the marketplaces. And that all sums together to a much higher revenue per day per employee number. We think that's more than doubled, and £500 plus is now very much achievable. Multiply that by your number of listers to get your hub revenue opportunity. So to bring this back down to some examples, Listing Monster, our platform, has helped accelerate that monetization process online for over 50 charities now, primarily focusing on improving the speed of listing and the sell-through of the listing after it's live. So for Crisis, we help double volume and income with their existing team. At InFocus, they saw between a doubling and quadrupling of speed per listing. Sense saw volume and listing quality and optimization go up from their existing team. With St. Francis, they found that listings produced by Listing Monster converted into sales at a rate of a third higher than pre-adopting the tool. And Florence Nightingale saw listing volume from their existing team go up by 63%. So I just want to touch briefly on how a platform such as ours can help you unlock that additional value from your stock and get it monetized. So we've got a big announcement we've got that we've launched this week, which we are becoming much more than just a listing tool. So we're now becoming a much larger platform, an end-to-end platform for charities, with tools to help you with every step of the item journey to unlock as much value and monetize it as quick as possible. So that starts with our sourcing tool, which I touched on earlier. So shop staff and volunteers can take a single photo and it's going to help them get that item in the right channel from the get-go. So much of the value flows from there. Once it's in the online track, you can then use our market-leading listing tool, which turns photos into optimized marketplace listings, which many of you are using already. And then our pricing and new merchandising tools help you price that item at the right level for the market, and then importantly, help you automatically manage and manipulate those listings after they are live to help get the sale. We've also built a foundational inventory and order management layer. So for any charities with a little bit more complexity, a bit more scale, who get a lot of value of having a single source of truth and a single source of action for their e-commerce flow, you can track and manage and take action on stock from shop to warehouse to dispatch with that. So before I finish up, I just want to share our personal vision for what we would like to do with the charity sector. So we've spent much of the last few years, at the coalface, at charity hubs, in shops, talking to loads of heads of retail, e-commerce managers. We've seen the resources you have available, staff, the stock, and we've also got some quite concrete examples now of what's possible in terms of improvement. And we think we can help increase the online income of the sector by 3 times in the next 3 years. Importantly, without a step change in costs. So with your existing resource and stock. Our kind of 3 main pillars for helping achieve that is improving that initial stock valuation and channel sorting. So much of the value flows from there. Secondly, unlocking in-store listing in a big way. So many charities have got a lot of room to run there if they would like to explore it. And then improving listing efficiency and sell-through, whatever your model. Next steps, if you've been interested in anything I've spoken about, do just come and speak to us. You can head to the website, book a demo, or drop me an email and we can set up a call. We've also got loads of free goodies to give away. So we've published something we're calling the Charity E-commerce Operating Manual. Recently, it's a big publication from us. A lot of work went into it. It's got the combined sort of on the ground experience of us seeing what works well and what doesn't work well in charities and how best to utilize AI in the e-commerce setup and improve your profitability. We've also teamed up with two leaders of charity online retail, one who ran the online operation of the largest Goodwill operation in the US, and one who ran the largest UK online operation too. So loads of good information in there. Do come and download it from our website, and we'll also be sending it out after this call. We're offering free consultations on best practice, how to implement that on your specific setup if you want any help, and happy to talk about benchmarks for the sector if you want any. And if any of the tools are of interest, we're offering free trials, training, tons of support. Just drop us a line and we can get you set up with that. So that's all from me. I'm going to hand over back to the CRA team. Thank you very much.